Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu. And on today's show, we have Lobo Tiggre, who is the author and publisher of The Independent Speculator. Welcome back to the show, Lobo.
Glad to be on again.
Let's begin by talking about your most recent article, which focuses on the palladium market and how the recent run-up in the price has been met with now a significant fall. You mentioned in your article that because palladium is an industrial metal, investors shouldn't see the downturn in price as a red flag for precious metals. Can you talk a little bit about this?
Sure. But before I go into that, I want to stress for all your listeners out there that my way of doing analysis, my way of doing business is not one of grand headlines. When I first wrote about palladium having ridden up so much last year, I didn't say palladium will crash. My palladium price target is half of what it is now, or some, attention grabbing headline like that. I did ask the legitimate question, could this be the Bitcoin of 2019. I wrote this in February as it was going vertical. And this is my way of doing things, is I don't say this is what will be, because nobody has a crystal ball. I say, here are the range of options. Here's what I think is most likely. And here's what you do if I'm right about that. And I'm honest about when I can't tell which is the most likely. And the ideal, speculative investment is when whichever option you have, there's a clear winner. Then you know what to do. So that having been said, I want to say I'm not the world's greatest expert on palladium. I'm just a speculator looking at the same data anybody else is. But it was pretty clear it was doing one of those vertical things that's very hard to sustain. And that's why I asked the question. And here we are having this discussion now. So let's take it a piece at a time. One is that the historical record for palladium and platinum is that when they really spike and they go vertical, they tend to have real hard corrections afterwards. So in the last 20 years, let's say, 2 out of 3 previous efforts resulted in an immediate and very sharp decline. The third one resulted in sideways for some time and then a decline. So that's sort of the historical track record to keep in mind. That having been said, palladium is rebounding this morning. It rebounded a little bit Friday. It's rebounding a little bit this morning. And getting to the second part of your question, remember that this is primarily an industrial metal. Yes, people make jewelry out of it, but nobody ever circulated a palladium coin. It was never money. It's not a monetary metal. It's not a safe haven metal. Nobody stashes their savings in the mattress in palladium. And rarely in platinum, for that matter, because nobody can tell. The average person can't tell platinum from palladium from silver. And nobody would substitute platinum or palladium for silver because silver is cheaper, right? So that's silver's unique call. Of the silvery metals, it's the one that has least benefit from substitution, right? So they're unique in this way. And it was pretty obvious when I made that, not really call, when I asked the question about palladium. At the time, we had all this downturny data from China. And I say downturny because nobody really trusts the data from China anyway. But the manufacturing was looking down. And most critically for palladium and platinum, their auto sales were down. And that's really important because palladium's primary use is an auto catalyst. It was substituted for platinum when platinum went way back up in 2008, 2007 era. And then people switched to palladium, and it's been uphill since the crash of 2008. And now I expect that to be reversed. But let's just look at the data right now. The new numbers out this morning are that China's having an uptick again in manufacturing. No new car numbers, but we did get data last week from China Beige Book saying that the Chinese government is really stimulating their economy. They've really opened up the spigots on credit. So long answer here. But if China really succeeds at getting their economy going back into a higher gear again, this could produce a little bit more than a dead cat bouncing, and it could re-stimulate auto sales, and we could see the current supply crunch in palladium, which is real, result in higher prices for a while. But if so, I think we're looking at a sideways pattern for a while, and then eventually the decline again, because ultimately, the same auto catalyst can be made with platinum or palladium, and it's just, not realistic to think that palladium can remain twice the price of platinum, and when it can be substituted so easily. So short version is it's an industrial metal. There's every reason to expect it to come back down on the basis of its industrial applications. And that's a very, very different thing from how the precious metals react. They're marching to the beat of a different drummer here.
Excellent. Okay, well, late last year, Lobo, you were part of our uranium series. And what I would like to do now is gain a deeper understanding into your experience of the previous uranium bull market. There aren't that many investors around today who are able to see a bull market for uranium and then experience the mania that took place. So what lessons did you learn from this bull market? And is the stage being set for a repeat of that mania over the next few years?
Second part first, yes, I do think we see a similar stage being set. Getting to the first part, I guess the lesson would be you have to be patient. I first started looking into uranium in 2004 when I joined KC Research almost 15 years ago. And at the time, the thesis was very clear. And uranium had come up, of course, from $7. It was already doing quite well, but still ridiculously underpriced, right? It was way below where it needed to be. And the story at the time was a little bit different. You had the decommissioning of nuclear weapons from the treaties between the Soviets and the Americans. The Russians were continuing to downblend weapons-grade uranium and turn it into fuel, and this was flooding the market with, reactor fuel without mining having to supply it. So prices were unrealistically low, and anybody looking at that could tell, well, that has to change. At some point, they run out of warheads to decommission, and we need more mine supply, and there's not enough mine supply. And those people were all right, but it took 4 or 5 years for that to really show, and we resulted in that real mania going up to $140 a pound. So there's a 20 bagger on just the commodity. And remember that resource stocks, your gold miners tend to move with a multiple of the price of gold. And uranium stocks, which is just went nuts. These produced 100 baggers for savvy investors who are in early and have the patience to hold on. So today we have, in some ways, a similar situation, completely different historical causes. We had the Fukushima disaster. We had the Japanese flooding the market with secondary supply. You've got a whole fleet of reactors, and suddenly they're all shut down by the government, and you're facing massive losses. Well, what do? Well, you have a garage sale with whatever you've got lying around that you can sell, and uranium fuel ready to go into your reactor is something you can sell. So we saw a lot of secondary supply hitting the market. And then lo and behold, Japan realizes they're an island without too many energy resources. And you know what? We actually need these reactors, and we can't shut them all down. And they've restarted 9. They're on the record saying they're going to restart 30, which is a lot. So suddenly your Japanese long-minded utility, these people look forward decades, and you see that the demand for your nuclear power is coming back. Well, guess what? It doesn't make so much sense to sell all that excess uranium. So this is in a context where the mine supply is still below the annual demand and has been for a long time. So if secondary supply drives up and the primary supply isn't enough, well, that has obvious one-way implications for uranium. So here we are. I'm doing what I said at the beginning. I'm saying here are the different possibilities. It is possible, and this may be what's happening right now. We're seeing a correction in uranium prices right now. It's possible that some Japanese utility or other market, and it's not just the utilities. I mean, it's pretty complicated actually. You've got these purifiers, and they have these centrifuges, and they can overfeed them or underfeed them, and so some other actor in the market could need money now and could be hitting the market now with a bit more secondary supply. And that could be why we've seen a correction in uranium prices right now. But that doesn't worry me. I mean, nothing goes up in a straight line. It would worry me if uranium just kept going straight up and straight up and straight up. Then I would say, oh, there has to be a correction. This is too good, too fast, right? So a correction is normal. You could even say healthy. I think uranium on a technical way of looking at it would need to drop below $22 a pound to really break the sequence of or the bottom trend line. But even that wouldn't worry me because the fundamentals are so strong, as we were just discussing. The mine supply is not enough. Some analysts, if you look at the industry experts and their projections, some of them are saying that its deficits from here going forward and greatly accelerating into the late 2020s. Others say there may be a surplus in the near term to 2024. But then even those people are saying the market goes into a massively increasing supply deficit from the late 2020s on forward. So a scenario is that you may have to be very patient. We may see some years of waffling around and then payday comes in spades. Another scenario is that it goes up with healthy corrections along the way from this point going forward. And on top of that, these basic alternatives, you have the Section 232 issue going on right now in the United States, where the Department of Commerce has been asked to investigate whether the U.S. dependency on imported uranium, which is almost complete, for 20% of its power generation is a national security issue. Nobody really knows what the result of that would be, but it seems pretty clear that in the America First environment of the Trump administration, it's very likely that the Department of Commerce is going to find a genuine issue there and make recommendations for the United States to regulators to encourage U.S. production, which would be not only an obvious benefit for the U.S. uranium plays, but it could have a very strong positive impact on the market. It changes the market dynamics, it forces players to, tells them where to go to buy their uranium, and that shifts contracts around. It could be very interesting to see how that plays out. Now, the beauty of that thing is that, one, that report from the Department of Commerce is due on President Trump's desk in 2 weeks. So this is a near-term potential catalyst. And if the worst case scenario happens is they say, no, it's fine. We get a lot of our uranium from Canada. We trust our lovely Canadian brothers. There's no problem here. Don't worry. Go back to sleep. Everything's fine. I don't think that causes any problems for the uranium market at all. It doesn't address the fundamentals that we just discussed of entrenched supply constraint. So the downside here, I think, is very limited. But the upside, if they are very aggressive, if they recommend the requested 25% requirement of domestic production of uranium, has a very powerful kicker for U.S. uranium plays, and it may have an impact on the uranium price worldwide.
Let's move briefly on to gold and silver. The beginning of the year looked very strong for the metals, especially as other markets were weakening and giving the metals more exposure within the mainstream financial press. So what are your current thoughts for the metals today, Lobo? Do other markets like the S&P 500 need to become even weaker for the metals to begin a new climb, or are the metals on their own path?
My answer to that is that, for some time, the precious metals market has been suffering from the world just seeing it as another commodity, trading gold up and down against the dollar like pork bellies or coffee or copper or any other commodity. And the pattern is true historically over decades. But there are times when the precious metals break out. They get treated as safe haven assets. They get treated as monetary metals, and they run contrary to the other commodities. And then there's time where the pattern reasserts itself and they trade like everything else. And that's where we've been really since 2011, and all the more so since 2016, and very strongly over the last year until Q4 2018, where the precious metals, it was absolutely the dollar in the driver's seat. The inverse relationship was very, very strong. And that was sort of had the gold and silver bugs in a death grip, and it wouldn't let them go. So I am a gold bug, you could say. I'm very optimistic on the long-term fundamentals on gold and silver, and I understand that they're monetary metals in ways that the people at the Fed don't or won't admit to. So it's been very frustrating to see gold just really stuck in this trading range, bound by this, trading as though it was just like pork bellies or whatever. And that's why I'm actually calling a different and more bullish tone, despite the price action. I mean, the disappointment that the rally didn't break through this time, the resistance level or so on, that doesn't really bother me. Not compared to this shift that I'm saying. And that is starting in more or less Q4 of last year, we started seeing gold really trading as the safe haven asset that we all know it is and should be seen as. We saw days when the markets panicked and gold spiked, even though the dollar went up that way, right? So people panicked into gold and the dollar instead of that inverse relationship that's held gold down. And that happened repeatedly last quarter. That's very important. And we're seeing that now, even today as we speak. Yes, there's good news out there. The markets are up. Gold is down. But you know what? The dollar was down at the same time. This morning, last I checked, gold and the dollar were down at the same time. In other words, that safe haven demand pushed both of them down while market giddiness pushed other asset prices up. And in my mind, this is very important because that's the key that we needed for a breakout to happen. You have to ask yourself, well, how does 2019 look? Is this going to be a year of happy, happy, joy, joy news? If so, you know what? Maybe lighten up on gold and silver because they're not going anywhere if that happens. Or is this a year fraught with peril and many different black swans and not so black swans, maybe some gray ones, maybe even some of the white ones that are out there are pretty scary for the mainstream markets. I mean, there was some positive news this morning. And maybe as we started talking about earlier in the platinum and palladium segment, maybe the Chinese will succeed and reigniting some fire under the economy. If that happens, that will change my outlook. I don't want to sound like Jerome Powell, but I'll be data dependent on that, right? If the Chinese succeed and really getting a higher level going in their economy again, which would strengthen their hand in the trade war negotiations, I can see that happening. And yes, that would change my outlook. But right now, most of the data worldwide is for deceleration in global economic growth, and it's in the US, it's in the EU, and despite this morning's numbers, it's still in China. Until we know differently, the outlook is pretty scary. And so in that context, the escape of gold and silver from being treated like copper or pork bellies is very bullish. That's my thesis. And by the way, just real quick, if you're bullish on gold, you have to be super bullish on silver because the data is very strong. It shows silver tends to lag gold in the major upticks and then surpass gold and do much better than gold. It's more volatile, so that makes perfect sense. On the upside, that extra volatility in silver can give you extra returns.
As we begin to wrap up the show, is there anything else you would like to share with our listeners today? Anything else on your mind?
Those are the main things. I guess the one quick thing I would say is I'm well known for having written a great deal about the new energy paradigm and the shift into the batteries, not just the batteries, but the wind power, the solar power. And as large-scale storage comes online, the whole renewable thing is gathering enough steam and prices are coming down to where they don't need government subsidies. I bring this up because in the context of a slowing global economy, my bullish on not all the battery metals and not all the new energy minerals, but the ones that are in short supply has been tempered. I've been data dependent on this too, in the sense that if the global economy does slow, and really in some cases, if it tanks or if it breaks down in some way, that's going to be bad for all industrial metals, even the ones essential and in short supply for the new energy paradigm. So it's dangerous to tell yourself, cobalt's in short supply. We got to have more cobalt. So cobalt's going up again, or lithium's going up again. All of these could take a whack if the global economy really slows down. So be very careful about that. And if you want to know what I'm doing and how I see these things evolving over the course of the year, I have a free, no spam, I promise, weekly email list you can sign up for on my website on the independentspeculator.com. A little pop-up will invite you to join our free list. And you'll get one weekly email. I will not spam the heck out of you, but I will keep you posted on my thoughts on all of these things going forward.
Excellent. Okay, well, thank you very much for your time today, Lobo. Much appreciated.
Thank you, and have a good one.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be? It actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?